Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back to the Reinsurance Podcast here in Monaco. James, thank you so much for coming on and agreeing to talk to us about some quite complex and niche topics that I don't understand very well, so I'm very much looking forward to that. But before that, how are you? How's your Monte Carlo going so far?
It's good. It's a pleasure to be here, quite the surrounding, so yeah, thanks for having us on. Monte Carlo's been good so far. We're sort of 2 days in now, lots of interesting meetings, really interesting concepts, lots of themes being drawn out. It's been good.
Brilliant. I'm glad you can share that with us. And one of the things I want to ask you about in a minute is probably more specifically to the retrospective side of the market, because that's your expertise and something you do very well at Lockton Re. But before we go into the detailed bits, any key market themes standing out to you just more broadly as you go between meetings and events?
Yeah, I think quite a bit publicised, so probably stuff that people have seen coming out in the press at most mornings, but I think there's been a lot of talk around a shift to buyers markets. Yeah. There's also then been kind of a lot around underwriting discipline, so that's interesting, seeing where rate will go in the next renewals. I think a lot around M&A has been discussed, so I find that really interesting because it resonates with what we do, and there's almost a direct knock-on effect potentially with opportunities in our marketplace.
Absolutely.
Quite a bit around culture, which I wasn't expecting so much. That's been interesting as well, so they're probably the key themes.
Yeah, brilliant. Well, glad to hear it. And maybe with that we can dive a bit into the retrospective piece. So, just in case there are others out there like myself who, despite having worked in reinsurance for a long time, have not touched the retrospective side, how would you sum it up? What is this market? What does it do? And so on?
I suppose the easiest way to describe it is it focuses on the reserves and the reserve assets of an organisation. So it's really around reserve risk. Mm-hmm. Okay, that could encompass either historically, like the sale of distressed businesses or non-core lines. Mm-hmm. But as we've progressed over recent years, it's become much more of a capital tool. Okay, so focused more on the reserve risk side, the liability side of the balance sheet. Yeah. Looking back.
Very interesting. And is that typically more sort of longer tail lines than I'm guessing? Or?
Absolutely. So, the industry itself was kind of founded back in the, I guess, like late 90s. Yeah. Really around like a lot of asbestos and environmental exposure that sat on people's balance sheets. So very long tail, latent exposures. Over recent years, that's changed a bit. So, of course, it is still very focused on your casualty lines, GLPL and others. But we're seeing a lot of reinsurers having a much broader risk appetite, right? So covering much shorter tail lines, potentially some business even with slightly closer duration to recent underwriting. So I think I came from an industry talk earlier today, and one of the words that stand out was evolving. Yeah. And I think that's quite a good word to kind of encapsulate exactly what has been happening over the recent past.
That's super interesting. And we've definitely seen casualty be a key topic already starting out. Everyone always says property cat grabs the headlines with its fires and hurricanes and so on. There do seem to be a lot of question marks out there about casualty reserves in general. Is that a challenge for you or an opportunity, I guess, in your space?
It's been a massive challenge, actually. Yeah. In the last few years, as we've seen kind of that peak of kind of social inflation, yep. Large litigations and everything else that's gone on, it's been very difficult. It's probably been one of the root causes, I would say, where we've had a real mismatch between what we call like the bid-ask spread or the buyer and seller expectation in a deal. But you're right, with that comes opportunity, and I think there's a huge amount of talk around casualty at the moment. Again, not to predict where the market's going to go, but if we are seeing potentially a softening of property rate, right? If we're not seeing the number or severity of US hurricanes in the season recently, or the last few years. If people are thinking of investing more in the casualty space, then absolutely, as you kind of consolidate that reserve risk, that accumulation of risk over time, then there's absolutely an opportunity for the retrospective market to come in and support the insurers.
And do you work mainly with sort of traditional reinsurers, or is that evolving as well in terms of who the capital might be?
So they're typically non-traditional reinsurers in this space. So obviously I won't mention any specific names. There's a group of kind of retrospective or legacy specialists that have been around for a number of years. There are a number of traditional kind of rated markets that operate in this space. And I think interestingly, we've had a period, as I mentioned, there was over the last few years, some difficulties around social inflation, US casualty, price expectation. We saw a number of kind of counterparties leave the market around that time, right? So the number of counterparties trading reduced. The capital deployed didn't actually, so it didn't really have a huge impact, but the number of counterparties there. Interesting that what we're seeing now is it feels like a lot of people looking back into this space. So we've got both new starters looking at potentially setting up vehicles. We've got traditional reinsurers looking at potentially utilising some of their capital as well. So, again, today probably had conversations where 3 or 4 names have been drawn out to say, well, these people might be interested.
Super exciting. And are there things that you look to outside of the industry as key trend indicators? You talked a bit about social inflation, for example, but are you also keeping an eye on specific perils, for example? Is that interesting to your clients' capital? Or?
I mean, when you say specific perils, it makes me think of like emerging risks and potentially things in that space.
The next asbestos,
well,
is that an interest area? Or?
I mean, it's certainly talked about a lot. I came out of another session earlier actually where we had this exact conversation with a lawyer who had been talking about, no one predicted the impact of asbestosis and asbestos in the market, right? And so we're here today talking about, well, not negatively what's that next big thing, but are we cognizant, are we aware of what that could be, and how are we planning for it, and what capital are we using to support that, and what tools and solutions are available to support the primary market, the reinsurers, we're almost in a retro market of those reinsurers as well.
Yeah, very, very interesting. And I guess if we've been looking back a bit, I guess, at how that market came together, any key sort of milestones or things to look forward to over the coming 12 months or so, and in the longer term, how do you see the space evolving from here?
That's a tough question. I had an answer to this until I just saw something in a report earlier, okay. So it's kind of made me rethink. Look, I do think that as the next sort of 12 months passes, the market took a bit of a dip last year in terms of volume traded and number of deals. Yeah. From what I've just seen, it looks as if we're seeing a sort of an uptick of the number of smaller deals completed. I'm pretty sure there's some big deals out there to complete before the year end. Yeah. I think we'll see a slight contraction in the number from where we are today and from where we are last year. We're going to see a slight downward dip in the number of deals completed, but I think that's because there's a lot sort of coming upstream. Yeah, so I would say 18 months' time, watch this space. I think we're going to be very busy.
Very, very cool. And then what are you personally excited about for yourself? Because I know you mentioned with all the cameras and mics started rolling, you're loving Lockton and the culture there and the team you're building. How's that all going and coming together?
To be honest, it's amazing. It really is amazing. I've been there 5 months. The team's fantastic. What we're trying to build, I think, is unique, certainly in my experience in my career. So really excited we brought together what we call our capital ecosystem or capital continuum that kind of brings in our capital markets, our capital advisory and our ratings advisory teams. Nice. Not all together, because obviously for regulatory reasons we have to operate as distinct individuals. But it's just amazing to be in a place that is so collegiate, entrepreneurial, but also successful at the same time. So very exciting.
Brilliant. Well, James, it's been an absolute pleasure having you on the show. Any final thoughts you want to leave our audience with before we wrap up?
I think a thank you to you. Thank you to the Reinsurance Podcast. It's been a great afternoon on the boat.
Pleasure having you, and I'm sure we'll see you around the conference soon afterwards. But good luck out there back in the fray, and we'll catch up soon. Thanks again.
Thank you, Ben.
Awesome. Thank you, James.
Cheers.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.